I'm going to give you a 3-step cheat sheet for trading SPY so you can crush the markets every single day. One thing for you though, please comment below SPY cheat sheet on this video. Let's blow this up so everybody on the internet can trade SPY profitably. Let's get right into it. Won't waste your time. The first thing I'm going to tell you about is the ADD, and this is the biggest nugget I'm going to give you because nobody on the internet is talking about it. If you search it, you'll find nothing. It's a hidden trick I learned from going to a meetup in Denver, met some of the greatest traders in the state, and one guy told me this one strategy I'm going to tell you right now. So the ADD is the advanced decline. It shows stocks advancing versus declining. So if most of the stocks are advancing, it's a very bullish day. Most of the stocks declining, very bearish day. But more importantly, it tells you the strength of the market. So if you see a weak reading, you don't really play aggressively on that day. If you see a strong reading, that's when you play aggressively, scale out slowly, size in bigger. So here's what it looks like. Then we'll go over to the charts and I'll show you exactly the ADD. But it's a collection of the NYSE stocks. So the most the readings can be is like 2,600. So whenever we see 2,000, that means 2,000 stocks are advancing and 600 are declining. So advancing versus declining. So that's really bullish. So when we see 2,000, we want to go and look for all day runs in the market. That's where we get huge trends. That's where we get huge strength, huge volume. But the note I put in here is very important to understand. You need that reading to hold for the first 30 minutes. Everything I'm teaching you needs to hold in the first 30 minutes. If it doesn't, most of the setups could fade and you could get chopped out. So ideally, this number you see, 2,000, the ideal scenario is you go from 1,500 to 2,000. So the levels rise throughout the day. The pressure builds. And that's how you can ride a trend and get that tailwind to run with the trend. So that's scenario number one with the ADD. You see a strong reading, past the 30 minutes, look for an all-day run. We only make money from trends, and I'm teaching you how to find them with this SPY cheat sheet. Number two, a negative 2,000 reading. You would think it'd be the opposite. You would think it'd be bearish all day, sell all day, but it's quite different because the market, people like discounts. People like down days. Whenever the market drops, it's an opportunity. So when the ADD is too low, every stock is falling. Guess what? It's going to be a dip buy. Typically what I see is in the afternoon, a secondary run happens. It's very bullish. And then a gap up the next day. But in the morning, that downward pressure will last throughout the whole morning typically. So when you see a negative 2,000 day, just wait till the afternoon, buy the dip. You have a very high chance of getting a gap up the very next day. And this is my last scenario that I see leading to great trends. 2,000 point push. And this could be any numbers. For example, let's say the ADD is 1,000, positive 1,000. Let's say it drops to 0. That's a negative 1,000 point drop. And it drops again to negative 1,000. That's a 2,000 point drop lower, which means all the stocks that were bullish that day gave up gains and they became bearish. When we see those 2,000 point pushes, we look for that momentum, that reversal that happened to continue all day long. Again, very important that we see the highest readings get wiped out. So we're looking for 1,500, 1,000, negatives, negative 1,500, negative 1,000. If those numbers get wiped out, we see the all-day pushes. So let me go first, and I'm going to show you SPY here. All you have to do to find the ADD, let's just pull it up on the right, is type in as a stock ticker ADD. And it's going to be the first thing right here, advance minus decline. So right here you see the ADD was 1,300 today. So that is nothing in terms of an all-day trend that I showed you. It doesn't mark any of the checklists, but it's coming close to the 2,000 push opportunity. So where we go from negative 1,300 to maybe positive 300, positive 1,000. We're at the point where we're giving up at least 500 points here on the ADD, and you can see the market's been holding all day. So when you get these pushes on ADD, the strongest pushes will lead to trends. A push in any direction will lead to support though. Let me move over to the prior day. This one's very interesting. So we saw a SPY yesterday, pretty much consolidate all day. But you see the ADD here go from positive 1,000 to 0. So that's a 1,000 point drop. It's not 2,000. And more importantly, after the first 30 minutes, it really stopped dropping. It went from 100 to about negative 100. So the first 30 minutes, don't really watch this stuff. I'll show you the trick though. This is where it went wild. This is on Friday, all day run. How would you have known it's an all day run? Well, Matt showed me when it goes to 1,500 to 2,000, that push to 2,000 gives you the potential to fuel the stock all day. And you can see here the ADD went from 1,600 to 2,000. So all day push was possible because of that ADD. So if you spotted that from your checklist, your cheat sheet, you would have been crushing the markets that day. So next, number 2, now that you understand the ADD, we want to dive into pretty much momentum resistances or supports. What's going to stop the market from a trend? And this is everything I typically see stopping us from moving higher or lower. And you want to check every single level I'm marking here, and there's weight to it. So for example, the prior week high and low, those are important levels. They're not going to carry as much weight as the intraday high or the open or the close, but we want to mark that prior week high and low, and we want to mark everything else on here. So go through your stock, whatever it is, SPY, Tesla, and just check all these levels, mark the highs and the lows. If it's bullish, see if you're over the highs. If it's bearish, see if you're under the lows. Don't chase both categories, but you're looking to either play one direction, one bias. And I'll give you an example of what this looks like in a second. But for example, pre-market highs and lows, they get a 2 times multiple. This is going to be pretty much just the open. The open gets a 4x multiple. The prior day levels get a 4x multiple. And then the prior weekly levels get a 1x multiple. So this means the higher numbers, if you get and you tally them up, the highest number reading could be 12. If you get anything around an 8, that's considered trend potential. And you want to adjust your strategy accordingly, because if you want to trade SPY profitably, you need to ride trends and recognize trends and avoid chop. Avoid chop, recognize trends, and this is where you leave runners on maximally. You try to leave the most runners on, scale out as slowly as possible on these super high score days. If you have a low score, minimal runners, don't keep many runners on, don't position on a lot, and don't look for massive trends. Short moves in and out, the scalper's market if it's a low number. And here's the next thing you want to do. So if you haven't broke over the pre-market high, that's your target. If you haven't broke over the weekly high, that's your target. If you haven't broke the intraday high, that's your target. So when you're looking to play these trends, you want to start targeting prior levels. That's how you scale out. That's how you pay yourself. That's how you stay profitable. So if you're going through the checklist, the bottom part is, your targets, what you want to try to hit. So now let me show you exactly what that looks like. This was Friday with SPY. Here's every single level I talked about marked out. This is the prior day low, prior day high, pre-market low, pre-market high. This is the open, low of the day on Friday, and then high of the day. Let's say we were trying to get in at this break or at this pullback. How much of a score would we have? How much of a potential do we have for continuation? Well, if you look below the stock, every single important level is beneath us. So we don't have too much upper resistance, which means the trend can go forever. Until it, obviously not forever, but it's going to have the highest chance of continuing at a high rate. So I go through my checklist and I give the multiples out. So pre-market, We are over pre-market high. Boom. So I'm just going to mark the highs because we're bullish here. I'm looking for longs, so I only care about highs. Pre-market high, check. Prior day high. Prior day highs right here, check. Next one, open. We don't care about the close because we haven't closed yet. The opening price of the day, we're over that, which is also the pre-market high, check. So that one's perfect. And that one's a 4 multiple because if you pass the open, there's typically the most amount of aggressive sellers there that are going to be the first ones to wake up and start shorting their positions and getting out. So the prior weekly high, this is the only one we weren't over. So that's the one we target. And we target the intraday high and the prior weekly high. So anything you haven't taken out yet, so this one here, we haven't taken out that high, that's what you target. And we don't hit that for SPY, but we did hit that for the triple Qs on Friday. So this strategy would have helped you nail a great target. And you also scale out at your intraday high. So what that means is you see this breakdown on SPY here. When we push up, you want to scale out at the intraday high a little bit. Again, trend maximum opportunities here. Scale out slowly. You want to leave positions on. So scale out a little bit. Let it run to the weekly high if you can hit it on that day. And then number 3, and then I'm going to do an example together with SPY today. But number 3, you have to understand the potential at the time of the day. So for example, the morning has a lot of volume, but also has a lot of risk. So I don't really like trading the morning. More importantly, it gives me no levels to go off of in terms of entering and exiting. I need to wait like 5-minute candles. I mean, that's enough data for me to make an educated decision and trade the market well. So I avoid the open. It's something I recently started doing, and it's made me a lot better executing. And I look to enter 30 minutes in, and I only look to play that 90-minute stretch. Here's why. The first 30 minutes is chop fest. The next 90 minutes is trend fest. The volume starts dying. The trend is in place. If you got in, you can ride that sucker with low risk because there's lower volume. We've gotten through the chop. We've likely picked the direction, and that is the opportunity. Once we enter the 11:30 to 1:30 EST zone, don't even look at the computer. Don't even make sense of it because it's the lowest volume and it's the lowest trend. The range is small, the candles are small, the volume is small, which means the risk is high. All it takes is one big order to sweep everybody out, longs and shorts. One order can just wipe everybody out because the range was small. If that volume came in quickly, it's going to produce a very large candle. It could go both ways, up and down. So we want to look to get back into the trend potential category around lunchtime. So this is 30 minutes before lunch. And then we look for the trend to start developing there. And then we look to play that trend in the last 90 minutes. Same thing as the market open. You have that trend development portion of the day, and then that trend push into the close. And the reason I mark these as blue is because you don't need to not trade them, but you need to be aware you need to size down. You need to have stop losses in aggressively, and you can't look for big profits because there's so much chop. So unless you have a great plan, you have a great setup, I don't recommend the blue portions of the day. And now I'm going to go over just today's scenario, SPY, and just mark all of those levels. And on the checklist, we're going to see if today is a good potential for a trend. You know, how would you play SPY today? As you can see, I marked supply and demand, so it's pretty obvious that we're chopping, but how would you know? So first things first, turn on pre-market. We're going to mark that high and low, and I'm going to go through. There's going to be, I'm going to mark this pre-market high, and then right here, pre-market low. And what are you seeing? We're pinned between pre-market. We tried to make aggressive moves over and below, didn't hold. So the market's super pinned right here. Well, now we're going to go prior day. do that prior day dance over here. Prior day high. So I'm gonna go prior day high, PDH, and then prior day low. So you have to pick your bias. You can't just go look for longs and shorts. You have to figure out what your bias is. So that's how you start counting how many lows or highs you're under or over. So prior day, pre-market, we go to the checklist here. And we're gonna go for the open. So the open's important. It's a key level. Open's right there. And we want to know if we're above or below it, basically. And then lastly, just got to do that weekly dance. Where are we on the prior weekly candle? We scale out to the weekly time frame. And I'm going to mark those right here. And this is going to be 418. And then we're not even close to them. So that's why they get like a 1. But they are targets. It's important to know they're more importantly targets than they are abilities for us to find range. So let's go through this sheet and let's see the potential of this. So if we were bullish, I'm gonna go through the bull sheet here. And we're just gonna start copying these. Are we over pre-market high? No. Are we over the open? Yes. So that's a 4. That's a pretty good multiple. And then prior day, are we over that? No. Are we over the prior weekly? No. So today's count is at 4. And then we see the lows. If you're bearish today, what's the opportunity? Are we under the pre-market low? No. Are we under the high? No. Are the open? Are we under the prior day close? Yes. So that one's a 4. And then prior weekly? No. So at this point, it's a 4 and a 4. If you're bullish, if you're bearish, it's pretty even. More importantly, it's pretty low. So unless we clear some levels, like if we can clear pre-market, and if we can clear, prior day low, that's where you start getting a bull run. So right now, you can see just by tallying up highs and lows, there's really not too much of an opportunity to trade the market today. And you could also note that just from the time of day. This is that 2-hour stretch where there's low volume. The ADD, there's no ADD triggers to tell me there's a trend. So there's multiple reasons for me not to trade right now. So exactly what I'm doing is I'm making a video, I'm not trading. So as you know, we do have a yearly pass inside the trading group. We're dropping a major sale on for May 27th. So if you do want to get on the wait list, text yearly to this number. You'll be able to trade with me for the next year. You'll get up to 300 streams, almost 200 text alerts, and you'll get my best PDFs, my courses, my books. You'll get some of those in the bundle for free just for grabbing that. So if you want to join the waitlist, we have limited spots, but it's dropping May 27th. Just text that number. That's all I got today. Hopefully you're having a great trading day. If you like this video, subscribe to the channel, and I will drop one of my top SPY trading videos to the right of me that I think you'll love. Peace.